in you mentioned Deutsche Bank. I think you meant Credit Suisse, which was
Credit Suisse, yes.
purchased by UBS, which has killed their balance sheet. But that goes to show, I mean, you could argue that the Swiss government and the regulators twisted their arm because of its systemic nature, because they are all tied together in so many ways. The Basel III regulations said that the banks had to maintain a 4.5% reserve ratio. It's been zero for quite some time. So when you think about it, you aren't depositing money in this bank. You're giving them an unsecured loan that they're buying assets with. It's gone. They only have to keep 4.5 cents on the dollar in the bank, and so they're making loans. And after the crisis that we saw with the treasuries, and now we see an environment where, okay, maybe they're buying 10-year treasuries again, thinking, okay, we everything's okay. Rates are higher and it's maybe safe to buy it. And then what do they try to do? They try to lower the front end of the curve and the back end goes up, putting the bank's balance sheet in worse position again. These are problems that will not go away. These are problems that are, I think, systemic to the system. They won't go away, and part of me feels as though that's the intention here. I mean, you ask yourself, why would the Federal Reserve, in essence, goat all of the banks into loading up on treasuries and fueling the narrative of low interest rates forever, only to then raise them by 500 basis points, the fastest raise ever in the period of a year, creating these problems? It's absolutely insanity. But I do think that the FDIC or the troubled bank list, so there's over 60 plus banks. There's probably a whole lot more than that are in real trouble. And I don't think the First National Bank of Lindsay was on that list. So anyways, yeah, I would just simply say the banks are not in good shape. If you have money in any bank account above the FDIC limit, I think it's insanity.
With over 60 troubled banks already on the FDIC's radar, and the US Federal Reserve escalating interest rates by 500 basis points in record time, the banking system is under unprecedented pressure. Andy Schectman warns us that banks are stretched to the limit, holding only 4.5 cents for every dollar deposited, turning our deposits into unsecured loans to fund risky investments. If one big institution collapses, a domino effect could leave account holders scrambling, questioning the safety of every dollar. With bail-ins now legally allowed, are you prepared to risk everything, or is it time to seek alternatives before it's too late?
We were told this by Powell. There would be consolidations. This is what they want. They don't want 5,000 banks. They want a much smaller network of banks as we transition into central bank digital currencies, making it much easier to roll out modern monetary theory if we really go down that path. But this is just beginning, Dunnigan. There's no question to me that this is just beginning, because the commercial real estate problem is not going away. People are not going back to these office buildings, and it's not just the office buildings; it's all of the establishments that have sprung up around it. And as people leave, they're these office buildings, and there's this vacuum of there's no one there, so no one is at the restaurants and the bars and the shops and the salons, and so they start to leave. And then the people who are living in that area say, the quality of life is going down, and the lack of tax revenue starts to increase because they're not getting the tax revenue they once did. So then services start to decline, garbage collection, fire, police, and well, if the quality of life is getting this bad, then I'm out too. And it's a vicious cycle that will end up very dangerously affecting the regional bank balance sheet, which I'm surprised we haven't seen more of collapse. But it's these programs that have come in and allowed a lifeline, if you will, that seem to be coming to an end. So I guess we'll see real quick what that looks like. But for people who think along those lines of conspiracy and reality and the fine line between it, maybe they've come. Let's just pretend that they've come to the belief that he will win. Maybe this is their plan to, blow up the system under his watch. And with the way the media is, they'll blame him for it. And regardless of the setup that he inherited, but I think that way. And unfortunately, that's the environment we live in. But it's that razor's edge of a situation where if the Fed doesn't come in like they have before, everyone says, well, if you just would have left your money in the stock market after '08, and you would have been made whole. Yeah, well, the Fed added $9 trillion into the kitty to support the bond market, to depress interest rates, to support the stock market, the real estate market. It's all artificial. It was all propped up by a Fed who came to the rescue. What would the world look like had they not done that? And I think that's what you need to ask yourself. And the question is, will they come to the rescue again this time? And if they do, what does the rest of the world think about holding our treasuries of any duration and our currency that is being inflated away? That's the question that has to be asked. So, you get to a point where you're so far in debt and you need you need, like, let me phrase it this way. We had the second biggest trade deficit in history last month, like 108 billion or something. Well, if that doesn't tell you how important it is for this country to be the world reserve currency, and how reliant we are on the rest of the world for imports, because we are reliant upon these people taking our dollar for their goods, and we are very reliant upon buying their goods because we've offshored so much of our production and manufacturing, and it's not sustainable. You end up compromising the world's desire to hold your currency and to hold your treasuries. That's when things start to really snowball. Now, we're not there yet, obviously, but these are the kind of actions that lead to an acceleration, lead to that moment where the world says, yeah, I don't want any more dollars, or I don't want your treasuries. And this is the rise of the BRICS and trading in local currencies, and why gold is doing what it's doing. So it's all one big dirty mess, but it's all connected together. You look at the law on it, and it says, and Florida, I believe, has it in front of their legislature, but it says you can't, in the states that have already passed legal tender laws, it says you can't make a person or a shop take your gold or silver, but if they agree to it, it's perfectly legal. So yeah, if he lives anywhere near southern Florida, Boca Raton, I come on, come do my plumbing. I'll pay you in gold and silver. I think it's great. Um, and as crazy as it sounds, you got 11 states where you could do that, and another up to 21 where it is moving in that direction. So that's sound money for you. And yeah, I agree. You look at a company like Schwab, and there were a lot of people who were citing their balance sheet looked horrible. I think they actually borrowed from the BTFP. They got a huge injection on their balance sheet, I believe, when they took TD's clients over and saved them. But yeah, I mean, the brokerages, you could argue, some are probably better than others, but I don't think that there's really any place anymore, when you put in the context of the great taking, where you can, and it's crazy to even say this, that what is safe anymore? If you can't trust the banks, if you can't trust insurance companies who are loaded with treasuries, if you can't trust brokerages, which your shares are potentially rehypothecated, where you are subordinate in ownership if there's a problem. It's really a crazy thing, when I used to always throw around without even thinking about really what it meant. It's easier to make money than to keep it, but it is. And now more than ever. And I think traditional forms of investing, which have really worked very well in a falling interest rate environment for 40 years, will come under strain, especially when you realize that the benefit of easy money, easy liquidity, and low interest rates were incredibly bullish. But what would a credit contraction and rising rates look like to this economy? It would be equally as bearish. And when you throw into it the over leverage that is inherent into the system right now, that's when it becomes a problem and starts to become systemic and starts to bring things down. But it doesn't take more than one big institution to go down. That's the point, is that ask yourself, if Truist Bank here in Florida, to that guy, he knows who Truist is, they're all over Florida, if it went under and it was bailed in, and they're a big regional bank, what would you all do? Would you sit on your hands and not yank your money out of the bank? Would you not call Dunnigan or myself and buy as much silver and gold as you could, would you not think to yourself, I don't really want to go to sleep tonight and think about this. I'm not going to sleep because is my bank next? And, for those people who didn't watch us last week, when Lindsay Bank failed, there was only 7 million in uninsured deposits. Silicon Valley and Signature had hundreds of millions, if not more, in uninsured, and it was all bailed out illegally. These poor folk in rural Oklahoma, Podunk, Oklahoma, no one's going to think about them. 7 million in uninsured deposits. They only got 3.5 million back and probably will never get that other 3.5. And so what that means is they said the FDIC limit is covered of 250 and half of the uninsured is covered. So if you had $1 million in that bank because you're buying a new home and you have to make payments, you get 250 plus half of the 750 is 375. That's 6.25. The other 375, you're dead in the water. What are you going to do? You're not getting that back. And if you do, they have 4 years to pay you, and in the form of bank stock in the new bank. And so, when people say the banking system is sound, no, it's really not. It's an illusion. And when they change laws to say you are an unsecured general creditor, i.e., last to be paid, and bail-ins are the law of the land, and yet no one knows about it, I would say it's not safe. They are not safe, and it's a powder keg waiting to happen in an economy which is teetering on the edge of some pretty dark things, especially as you see yields on the back end of the market rise, which will lead to yield control on the market, on the bond market, where the only one who's going to come in and buy the treasuries is the Federal Reserve. This leads to hyperinflation. It's all roads lead to the same place. And this is what happens when you mess with Mother Nature and continue to paper over all of these inequities instead of letting them be cleansed and letting true capitalism work.
Now that you know the real risks hidden in our banking system, you're going to want to watch our next video on how central bank policies are quietly setting the stage for the next economic storm. Don't miss out. Like, comment, and subscribe for more insights. Stay informed, and I'll see you in the next one.